that markets were somewhat well prepared for this kind of ultimate action, right? And you had institutional investors pretty well hedged coming into that, right? So I think in this day and age, right, we've seen kind of all these structured products, vol selling products. You get a very quick reaction function to kind of monetize hedges, right? So I think that was part of kind of the bid that we've kind of had. You've had some pretty elevated kind of concerns within the market over the last week. We talked off camera about the Citrini research report and just the anxiety, kind of, we call it AI anxiety at this point, around that research report. And then we also had some percolating concerns around, kind of private credit and credit markets last week, right? So, you came in last night, futures down around 1%. We kind of quickly bounced off of that. I think the other piece of things is that, markets have gotten desensitized to geopolitical events over the last couple of years, right? You also have the idea that the U.S. is now, kind of much more, kind of the energy independent, right? Sure. I think is the best way to think about it, right? And so we're not as dependent on kind of oil coming out of the Middle East, right? So, we're in a better position to kind of deal with these sort of geopolitical events.
What parts of the markets will you be paying closest attention to? Is it oil, energy? Is it something in AI to give you some sense of what the next parts of this story, the next catalysts out of the Middle East would be for investors here in the U.S. who are paying attention very closely?
Yeah, I mean, look, just because we bounced it, I don't think that doesn't mean that we're out of the, kind of out of this period of volatility, right? We can see this kind of play out, and it really depends on, how things kind of evolve over the next couple of weeks, kind of within, kind of within the region. Pay attention to oil markets, right? We basically saw the typical conflict playbook, right, in general, outside of kind of the idea that equity markets didn't really trade off. The other piece that was a little bit different is that we didn't see that bid come into treasury markets, right? And that's really, I think, partially because of the inflation concerns around the move higher in oil prices, the move higher in natural gas prices. If you look at it, about 20% of the world's oil flows through the Strait of the Hormuz, about a third of global LNG and a third of kind of fertilizers all kind of move through that area, right? So potentially inflationary kind of impacts, so that's, kind of another thing to pay attention to.
Yeah, oil benchmarks both gap, not just moving up, both gapping up on the day. WTI West Texas here in the U.S. as well as Brent crude. Brent crude reaching its highest level since January 2025. Looks to be right now at about 78.41 or so. In terms of inflation pressures, we can't forget about the Fed. It's not the type of day we're talking a lot about the Fed, but you can't go very far without forgetting they have a job to do.
Yeah, and then this, kind of this does put kind of inflation back on, kind of on the map. But the idea that we're only seeing kind of oil prices up 6-7%, right? If you had said that to me 10 years ago, that we just bombed Iran and oil prices are only up 6 or 7%, I would have laughed at you, right? So, it just kind of goes back to that idea, right, that markets are pretty well supplied in the near term. And so you have a little bit of buffer. You had OPEC Plus also kind of increase their production, saying, over the weekend, saying that they would kind of buffer, kind of some of what's going on as well, right? So we'll have to see how things kind of play out over the next couple of weeks.
Michael Reinking is both the senior market strategist and the senior Michael strategist here at the New York Stock Exchange. Thank you for helping us better understand the enormity of a day like today. It's great to have you here.
Absolutely.
As always.
Thanks for having me.
Josh will grab your mic. Bobby, you and I will head this way. And of course, the IPO market is one of the many big storylines we are talking about. And analysts here on Wall Street expect the IPO ecosystem here in 2026 to be just as strong, if not stronger than last year. So to that point, poly market participants are trying to figure out what will be among the highest profiles IPOs between now and the end of 2026. SpaceX, AI chip provider Cerebras, as well as Discord. All three of those companies have better than 80% odds to go public at some point between now and 2027. Ledger at 73%. Two rivals here in the conversation. Anthropic on the one hand, OpenAI on the other. Both have about 50% or so of coins flip chance of going public. Other prominent names on the list, Epic Games at 44%, Shein at 38%, and Waymo down at 20%, more than $4 million in total trade volume on this particular event contract. Time now for two NYSE notables on a huge day. We got to start with one of the worst performers in the S&P 500. This is Norwegian Cruise Lines. They reported results this morning. Despite a beat on the bottom line, shares falling on weaker than expected earnings guidance for the full year ahead. They expect EPS to come in at 238, but that's well below what FactSet estimates at 257 a share. Shares in Norwegian Cruise Lines falling below the 50-day and the 200-day moving average on this 10% drawdown to their shares. However, only down about 2% so far here in 2026. Next up, we got to take a look at XAR. This is the State Street Aerospace and Defense ETF, having a strong day, up almost 2.5%. After the weekend's events in Iran, hitting a fresh all-time high today of 295. Lockheed Martin, Northrop Grumman, L3 Harris, these household names, they are among the most weighted names in this particular ETF. XAR is up 20% so far here in 2026, and all of the major defense and aerospace stocks were up in positive territory on this Monday. And now in the broadcast, Money 2020's very own Scarlett Sieber is back with Jargon Translator. She's putting all the complicated, wonky fintech terminology into language for everyday people to better understand. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where we break down the finance lingo that sounds like a secret society, but it's actually ruling the world. Just like a secret society. Today's term is going to be ISO. No, it's not a camera setting. It's an independent sales organization. Here's the deal. ISOs are the middlemen of merchant payments. They're the folks who help make business accept credit cards by partnering with the big payment processors. Think of them as the matchmakers of the payments world, connecting your local coffee shop to Visa and MasterCard so you can tap and go. That's really important because this matters for scale. ISOs bring thousands of small businesses under one umbrella, negotiate better rates, and provide hardware, software, and even support. Without them, every mom and pop shop would be trying to cut deals with giant processors. We know how that's going to end. Good luck. So here's the twist. ISOs live in a competitive jungle. Margins are thin, tech is evolving, and if they don't keep up with the integrated POS systems and fraud tools, they be toast. So next time you swipe at your favorite boutique, remember, that's an ISO behind the scene that's making that transaction happen. ISOs, because someone has to play Cupid between your card and your cash register. And with that, that is your Jargon Translated.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Our next guest comes to us from Washington, D.C. This is Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets at the Trump White House. It is great to have you here. Welcome to the New York Stock Exchange, and welcome to the show, Patrick. Good to have you.
Thank you for having me. It's great to be here.
First and foremost, give me your sense the latest state of play on the market structure legislation continues to work its way through the other end of Pennsylvania Avenue. What's the latest?
So the latest is it's passed out of the Senate Ag Committee, the portion dealing with CFTC. We are actively working to get it back on the books for a markup in the Senate Banking Committee. The main issue that's been the sticking point is the stablecoin rewards and yield coming back up in the context of the digital asset service providers, the intermediaries, potentially being able to offer rewards and yield on stablecoins to their customers. We at the White House have convened a number of meetings over the past month to try and solve this issue and broker a compromise here. Crypto, to their credit, has made considerable strides in coming to a compromise position. It's time for the banks to reciprocate and ultimately strike a deal on this, because this is the issue that we believe is the domino that will fall, and ultimately everything will fall into place after that.
So kind of the Cliff Notes version, or the too long didn't read version of that particular dispute over stablecoin yield. The crypto firms wanted to offer rewards. The banks say, no, you could, in doing so, essentially pull away from our core deposits. In what ways have you seen the crypto companies somewhat maybe adjust their earlier thinking as those negotiations have continued?
So I think they've conceded on a number of points on restricting certain kinds of idle interest or yield on just balances sitting there, which obviously feels a little bit more like a deposit, but preserving a list of permissible activities for activity-based rewards and yield. So things that look a little bit more like credit card rewards, the stablecoin in motion, or the user undertaking some kind of activity and getting rewarded for that. The United States obviously cares a lot about the proliferation of U.S. dollar-backed stablecoins, has a material impact on our borrowing cost, has a major impact on the ability of the dollar to maintain its role in global trade and global foreign exchange as the reserve currency of the world. So ultimately, we're going to deliver a compromise on this issue, and we believe that it's going to be a win-win. Stablecoins will proliferate. That's in the interest of the United States. And we also believe that this market structure bill is absolutely critical to bringing digital assets into the regulatory fold, normalizing them as an asset class, and we think there are probably trillions of dollars of institutional capital waiting on the sidelines for this regulatory clarity to come into effect.
Patrick, you know as well as I do, it's one thing to get something through the House of Representatives. The U.S. Senate likes to call itself the cooling saucer, where they say cooler heads prevail. Are there specific provisions in the market structure legislation the White House is either actively advocating for or actively advocating against?
We've been, in addition to stablecoin rewards and yield, and in that we're really just trying to broker a compromise here on this issue. But the other areas that we want to see strong language on is protecting developers, software developers. We want to bring this activity back home. Ultimately, during the Biden administration, they didn't succeed in killing crypto. They just succeeded in driving it offshore. The United States needs to lead on this issue. The president wants the U.S. to be the crypto capital of the world, and that requires bringing the developers back here, bringing the capital back here, and growing crypto businesses here in America. So that is critical for us, that we protect developers in here, and that we also allow for decentralized finance, DeFi, an opportunity to innovate and create new business models that we think is going to unlock the true promise of crypto.
Bitcoin, the way Bitcoin is priced right now, it is down 45% as an asset off of its October highs. Does the asset pricing part of the conversation concern you, or is that sort of outside the main purview of trying to get this particular legislation across the finish line?
I think there would be a positive effect from this bill passing. I think it was J.P. Morgan just the other day said that they see some tailwinds
by mid this year, I believe.
They recognize that ultimately there's going to be positive movement into this space from institutional capital once there is that regulatory clarity. Ultimately the price action for anybody that's been in crypto for a while, this doesn't concern them. They kind of yawn. For the newcomers, maybe it's a little bit concerning, but we're still long-term very bullish on crypto. We believe that ultimately getting this bill passed is going to lead to more people getting in space and allow the banks to also start to engage in some of this activity. There's this unfortunate divide of crypto versus TradFi, crypto versus the banks. We believe the future is ultimately convergence. Crypto is going to start engaging in banking-like activities. Banks are going to engage in crypto activities. It's all going to become one thing. This is the future of finance. It's part of updating the financial infrastructure of the future, and we're managing through this interim period where it's antagonistic or adverse,
Sure.
But ultimately they're going to update their business models and take from one another the parts of it that make the most sense. So ultimately consumers are going to win when they have choice.
Ultimately, but compromise does not have to be a dirty word. We say it all the time in Washington between parties, Democrats versus Republicans, but maybe it's true for TradFi and the new look for the crypto space as well.
It's cliche to say, but there really is a win-win here. And as we've talked about with a number of banks, they're very bullish on the text. There are some issues that they want to see worked out. Same is true of crypto participants,
Sure.
but there's a lot of people on traditional finance that also want to see clarity ultimately get
Absolutely.
passed.
Patrick Whitt, best of luck as negotiations continue down our nation's capital. Come back to the big board anytime. It's good to have you on the broadcast today.
Thank you very much. Thanks for having me.
Don't go anywhere. Much more Taking Stock coming up right after this.
follow you.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the Big Board. Joining me now are two amazing guests, not just because they're here on the show, they also just rang the closing bell. It's great to have both you guys, Rich Lewis and Todd Carpenter, both of Donaldson, outgoing, incoming. Congratulations to both you guys. Thanks for being here.
Thank you very much.
Of course.
Thanks a lot.
And for you as well, let me start with you, an outgoing role. Talk to me about your time and tenure here with the company, and why is today such an important day with this gentleman standing here to your right?
Yeah, I worked for the company for 30 years. I've been the CEO for 11 years, and we have gone through a wonderful transition period. It's nice to hand the torch off to Rich, who's been with the company for 24 years. I have a lot of confidence in Rich that he'll take the company to new heights. So it's really a special day for the company.
Of course, Rich, what does this mean? I mean, to you, especially, you're not just a newcomer here to the space, like your colleague just said here. You've been here with the firm for quite some time.
Yeah, Donaldson's an 111-year-old company. I'll be the 7th CEO. It's an incredible honor, and I'm really excited about the opportunity.
What's it like for both you guys to be down here for the New York Stock Exchange today?
It was incredible. It's our second time here, my first time ringing the bell, and it never gets old.
Yeah.
So, yeah.
What more would you want to know, especially as you head into your own new role here, Todd, for the average person watching at home who might not have strong familiarity with Donaldson as a brand?
You know, Donaldson is 111 years old. We are a technology-led filtration company. We have a diverse portfolio of businesses that really help us go through up and down cycles really strongly and come out of every tough time stronger than we went in. We have a very good business model where close to about 70% of our business is replacement parts, which really gives us strength as a company.
And in terms of like how the company has been positioned, how closely do you have to follow or not follow the general macroeconomic pressures that so many publicly traded companies deal with on a month-to-month basis?
Yeah, of course, we follow those very closely. We're a global company. We have done a really good job of diversifying our footprint, and so we have in-region sourcing and demand, which gives us a lot of flexibility and a lot of resiliency. But of course, we're like every other company, we follow it really closely.
Yeah, of course. Rich, especially here now for your new role, what do you think would most surprise the average person out there about the work that you and your team at Donaldson do?
I think the technology and the innovation that actually goes into filtration would completely change their perspective on those products. The science and the technology is, we're filtering things all the way down to nanometers, all the way up to the size of your human hair, into an endless supply of markets. It's incredible. We've got a great team of corporate technologists that do that work every day.
I love that the size of the human hair is on the big end of
Yeah,
that scale.
that's the
I'm thinking
big
how
end.
big you go, and you're like, it's the size of a human hair. And before I let you gentlemen go, give me some sense, not to make this like an earnings call by any means, but give me some sense about what 2026 holds, you think, and the things about the company, how you're positioned that most excite you for the road ahead.
You know, I think the company has a lot of growth opportunities. Under Rich's leadership, we're just going to continue on the path to take advantage of those investments that we have made, and we've laid a strong foundation. We have fantastic talent all across the company that continue to deliver for us exceptionally, and so we look for a really strong 2026.
I mean, obviously, today is a great way to do day one down here at the New York Stock Exchange. What does day two and the rest of your first week look like?
Yeah, day two, we get back to work, making sure we're making products, taking care of our customers. As Todd said, we have a great opportunity in each of our markets, and our backlogs are strong, and we're looking forward to a strong finish to 2026.
Rich, Todd, congratulations on your tenure, your new role, and same for you as well. Thanks for being here, and thanks for being on the broadcast, guys. Good to have both of you.
Thanks for having us.
Absolutely.
Appreciate it.
Don't go anywhere. Much more Taking Stock, including the latest from Scarlett Sieber at Money 2020, right after this. Welcome back to the show. Time now for the latest headlines in the world of startups, raises, and rounds that you need for your Monday afternoon. First up, OpenAI set to release new details about its somewhat rushed agreement with Pentagon officials in recent days. The firm now saying its models will be deployed only through cloud access with technical safeguards intended to ban mass domestic surveillance. Next up at this hour, Elliott Management inviting banks to pitch for a potential London-based IPO of Barnes & Noble and Waterstones. It's a move that could give a boost to the UK's listing market after a bit of a prolonged drought. And finally, women's telehealth platform MIDI Health raising $100 million in a Series D funding round, pushing its valuation above $1 billion as it expands an AI-enabled care model for women across every stage of life. And speaking of MIDI Health, FinTech TV lead anchor Remy Blair sat down with the firm's CEO and co-founder Joanna Strober to discuss how the new raise is changing the game for women's health. Take a look.
Joining us today is Joanna Strober, CEO and co-founder of MIDI Health. Joanna, thank you so much for joining us today. Well, MIDI Health is a virtual clinic for women in midlife serving all 50 states. The company just hit a massive milestone, a $100 million Series D funding round and a $1 billion valuation. So for our viewing audience, tell us about MIDI Health and its mission.
The MIDI Health's mission is to help women all over the country really feel better and thrive after age, as we age. And historically, women after having babies haven't gotten enough attention and haven't gotten enough support. And our job is to change that by giving all women expert care throughout their lives and covered by insurance.
And Joanna, while I have you here, how has your vision changed from managing symptoms to mastering longevity?
What we learned is that the things that women do in their 40s, their 50s, and 60s have a huge impact on their lives and their health in their 70s and 80s and beyond. So what we want women to do is be much more proactive about their life. We want them to take the time in their 40s to take the right supplements, to take the right medications, to exercise and sleep and lift weights and do all the things that enable them to age in a much healthier way.
And I do want to talk about unicorns here. So you just hit a $1 billion valuation. So what does that signal to the rest of the healthcare industry?
Women's health has historically been underserved and undercapitalized. And what we are showing is that when you fund really high quality women's health companies, they can grow and be really good financial opportunities for investment. So what I believe we can demonstrate is that women's health is a great investment opportunity. It's not just something that you want to do because it helps women, but it can actually build great companies.
And Joanna, I do have to ask you about artificial intelligence. So how are you approaching AI over at MIDI?
Oh my goodness. AI has been magical for our business. Essentially, what we're able to do with AI is ensure that all women receive really high quality care. We use AI for training. We use AI to ensure quality. We use AI to get new research incorporated into our care protocols. And so AI is enabling us to offer a much higher quality of care than we ever could before and more efficiently. So it actually saves time and it offers the opportunity to give a much higher quality of care.
And Joanna, by the end of 2026, what does success look like for MIDI Health?
Our overall goal is to be taking care of millions of women a year. That is my goal. Whether that's 26 or 27, we will get there. And I believe we will be taking care of many millions of women every year and enabling them to live healthier, stronger lives.
Well, Joanna, before I let you go, you have been successful building MIDI Health. So what do you want the audience to know about what you're doing?
Using technology, MIDI is able to now offer expert care to women throughout the country, wherever they are located. We can offer them incredibly high quality expert care covered by their insurance. This has never been done before. So whether you're sitting at home in your bedroom closet and you want to talk to someone about your health or from work, wherever you are, we want to be there for you, to be your care companion, to take care of you, to enable you to feel great and to thrive as you grow. That's really our job, and we're very excited to be able to offer this to more women.
Well, Joanna, it was wonderful talking to you. Thank you so much for joining us, and thank you so much for sharing the story of MIDI Health with our audience.
Thank you. It was really fun.
Welcome back to the show. Tomorrow here on Wall Street, we will get quarterly results before the bell from some key names. That includes Target, Best Buy, as well as On Holdings, who will join us right here at the New York Stock Exchange tomorrow. And in the afternoon, we'll get quarterly results from Ross Dress for Less, GitLab, as well as CrowdStrike. Thank you one and all for watching today's Monday edition. It was a busy one of Taking Stock. Have a great night. We'll see you again tomorrow here at the Big Board.